Welcome back to Crown's Crypto Cave, and I would like to wish everyone a happy little Sunday morning out there in this world. Go to church, have some cryptocurrencies in your life, and then settle down and look at these charts with me. All right, so the magic internet money, what is it telling us right now? Well, to me, we've in this last week we've actually had some nice action, and I think it's a little bit telling of the overall direction on Bitcoin. So, just kind of recap, this will be more of like a market stance, I suppose to say, and the big things to watch out for in the coming weeks. So, first things first, it seems to me, and it seems very visually obvious right here, that we are consolidating between our 200 simple moving average and our 200 exponential moving average. That's your purple, that's your red. Having a nice little action being put in right here after this very, very powerful green girthy candlestick being put in place right here. So consolidating this area right here, I do start to interpret as bullish. I'm leaning bullish in a way. Now, overall, I need to be very adamant in stating this, that I have to be neutral in the market given the current area that we're in. And the reason why that is because I cannot be bearish at all whatsoever from the stance of making new lows past this current 5,800 low that we currently have, until we start closing dailies below this area right here. If you start closing dailies below this area right here, about 6,800, yeah, I become crown sitting bear, and I want to be throwing them red, thick, girthy, tight candlesticks. Anyways, so with that said, by the same token, I can't be full on bull back to all-time highs very simply by looking at the monthly until we start trading above this area right here, 11,500. Okay, so with that out of the way, let's go into the lower time frames and look for some clues. That always sounds weird because, you think of that South Park episode. Anyways, this is your 2-hour chart right here. And to me, it looks like we are painting an inverse head and shoulders. Now, the volume characteristics on Finex are a little bit finicky. They're not, they don't look right, so to say. But on the other exchanges like MEX and Stamp, it does look right. And you can just trust me on that one. And I believe the yen as well, which is the one that I put the most weight on. So, if we are painting an inverse head and shoulders, then it would follow that our neckline is probably right around here, around this 8,300 number, a little bit lower. Looks good to me. And of course, left shoulder, head, right shoulder. So with that said, whenever you have one of these put in place, you can't, or at least I don't want to be over aggressive with trading this. Unless if I can get a good position in near one of those areas that I don't want to see fail. So obviously, if I am going to be taking a long, I'm only going to be taking a long if we break the neckline right here, which confirms it, or if I can get a very, very low risk entry somewhere down around here, a little bit below 8,200, as then I would know very, very easily that as long as we're above 8,165, it's still in play. It's still technically valid from a technical analysis standpoint. So with that said, I want to be thinking a few steps ahead, like a chess match, right? Of what kind of implications would this have if we did play this to the upside? Well, I'm glad you asked, because we can make a little measure move right here. Of course, anytime you do have an inverse head and shoulders or head and shoulders of any sort, you can make a measure move. Doesn't mean it's always going to play out, but it does kind of give us an idea of where this could land. If it does indeed play out. So again, if you do get confirmation with like a 2-hour dilly closing above 8,300, then this is the area I'd be looking for. Somewhere right around here, around 8,700 is kind of where this move would imply. 8,700. And again, these things are not like exact, doctor movements. They're more like, they're more like gets you in the ballpark type shit. So with that said, this would kind of follow very nicely with analyzing this area over here, as we do have some good we do have some good historical relevant price action going on over here that would provide the next kind of resistance. So I'd like that for good confluence. Now, what else? Well, of course, going back to our daily, you could see very easily that this would coincide with a daily dilly break of this 200 simple moving average right here. And let me just briefly talk about why that would be very significant. And the reason why that is because we have not broken this red 200 simple moving average essentially since this area over here, almost 4 or 5 months ago. So this has essentially been holding Bitcoin back, so to say, for the last, for the last foreseeable past, I suppose. And if we were to close a daily dilly above it, then it would follow that is a change behavior by definition. And if we do start doing that, then I'd really be leaning towards seeing a little bit more upside. But where would that imply? Well, if we look at this area over here, going over my GDAX charts, you can see very easily. Or sorry, if I put on my drawing tools over here, you can see that we actually have a very nice cup and handle being put in over here. Sorry, let me just draw on the handle really quickly, and it would look something like that. And with a cup and handle, of course, you can make a measure move as well. And just kind of doing that out, where would this spit back out? Well, it would apply right around here. So again, 91, 9200 would be the measure move off of that. So again, this is why I'm always trying to think of what things would look like if certain boxes get ticked, and always talk about that snowball effect, that domino effect, where you start checking off the boxes, and it's like one thing leads to the other. And now we can really see how this could happen. Overall. So yes, while overall from a technical analysis standpoint, I have to be bullish here, or sorry, I have to be neutral here. My opinion is starting to lean a little bit slightly towards the bull side, breaking this. Just looking at the data. Now, by the same token, there's always two big scenarios. So that's the more bullish scenario, obviously. Oh, also, of course, forgot to state exactly what's in front of my face right here. So look at this right here. We do have. If we take off, we can take off these areas as well, just so we can get a more clean chart. You can see it very easily that we do have some sort of a falling wedge being formed on the 3-day daily chart over here. The volume characteristics are right. The price action looks right. The size, the shape, the smell, the taste, it all looks good to me. And we do have a confirmed, or do we have a confirmed break? Yes, we do. We do have a confirmed break, but god damn it, I really do hate these diagonal trend lines over here. So with that said, falling wedges or wedges of any sort are my quite literal least favorite patterns to play. They just have the least, in my experience, they just have the least probability to actually play out. But technically, yes, you can make a measure move off this. And where would that imply? Well, that would imply a move towards this area over here, as we have gotten the confirmed breakout of this, which would be right around 12,400, or like 13. I think I have this area at 1,300, or sorry, 13,000. But you would imagine that this does line up very nicely with this former big spike down. So again, I kind of like this from a more historical relevant area. So with that said, anytime you do have a falling wedge, one of the reasons why I hate it is, a lot of the times you're going to see a breakout, confirmed breakout, and then it comes back down and retests, your falling wedge breakout trend line, to see if we're going to use it as support or not. And right here, right now, the move does look good. Do not get me wrong. I mean, just looking at the volume characteristics, just looking at the shape, everything looks good to me. You got some good accumulation going on down here, and a decent reaction off your 200 exponential. So again, on your 3-day chart, to be clear. So again, overall, that's what makes me turn a little bit more to the bullish side. However, of course, like we just stated, there's always two sides to the cone. And if there's two sides to the cone, what's the other way of looking at this? Well, I think very simply here, the other way of looking at it is saying, well, Crown, listen, man, we haven't had any sort of change of behavior. If we go back on over here to Finex, we haven't had any sort of change of behavior in this in the overall macro direction. We're still well below that 11,500 area. And look at this, we're still getting fucked by this red this red 200 simple moving average right here. Not only that, but if we do look, if we go a little bit deeper and we do look at some Fibonacci retracements, and we take this as our swing high, that 10,000 area as our swing high, and this current, what is this, like we'll just call it 6,000 low as our swing low, you can see very easily as well that your 618 is what has stopped this movement right here. So that would imply that an algo target was hit on this corrective move upwards here, and then immediately we sold down. So the best way to kind of look at this, in my opinion, is that if we were to break down this current consolidation to the downside and start closing dailies, below 7,900, I think would be pretty convincing. But especially, 7,700 would be the slap in the face signal. Then that would really start to imply, okay, we just had a corrective move upwards. The algo sold it back, and it's very likely that we might make our way down to that 6,800 level. That's where the big test will likely come, or that's where the big test will come, is what I should say. This is something I do believe in strongly. So by the same token, that I can't be super uber bull, like going back to all-time highs bull until we start trading above this 11,500 high over here. I can look at this area over here for like my bearish pivot, so to say. And as long as we're above 6,800, or I guess it's more like 6,850, depending on which exchange you're looking at, I can't be too bearish saying that we're gonna see new lows for the year. Oh, I guess not for the year because we were obviously well below 3,000 a year ago today. But what I do mean to say is below this low right here. So if we were to start closing dailies below this area right here, that would be my slap in the face signal. Crown, get fucking short. Don't be trying to buy the dip anymore. And respect these goddamn bears because they are powerful. They are powerful, not like the kind that you meet in San Francisco, but the kind that will sit on your face and crush you with big, girthy red candlesticks. Anyways. So with that said, that's the two major the two major things to be aware of. Now, of course, if you're more of a day trader like myself, and you're looking for some more just more relevant price action, because these things are probably going to take like a month or two to hit. What I'd be looking at is this area right here is your next big support to kind of hold. If you do lose this area, it also coincide with losing your purple 200 exponential as well. So that'd be the first kind of warning sign that maybe we're heading lower. What's the next one? Well, right around here, of course, right around here, your 382. That's where I'd start to get very, 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 very concerned with the downside being imminent. But of course, 6,800 is still, the floor, so to say, right now. The second that we take out 6,800, that's when I can, really start doing the market sells and stuff like that. So again, at this current moment in time, if I am trading this range from the most traditional standpoint, I want to be neutral, and I'm just looking, to be a buyer and support, selling resistance. It's just that goddamn simple. So again, you have this area right here, and then you'd have this area right here, technically speaking. But it's not, it's kind of out of no man's land. But you do have some good historical relevance with this area. Although again, I wouldn't be trusting these cones over here. You can't trust them cones. These cones ain't low. Anyways, so I do want to talk about a few other things as well. There are some concerning things in the market right now. We have our other market leaders like Ethereum and Litecoin not acting like the good little boys that we need to see them act like if I want to be more expectant of a more bullish market. Again, Ethereum cone, Mr. Buterol over here. I'm sorry, but still stuck in this bear flag formation. Just kind of painting it out, filling it out for the last month and a half or so now. It started in June, late June. And we're now all the way almost in August. So again, this is a little bit concerning to me because again, the world that I come from is as a market maker in equity options on New York Stock Exchange ARCA, and the big thing with this is that anytime you see one of the major indices like the SPYs, the Indus, the NYAs, all this sorts of stuff, make moves to the upside, and then say their subsidiaries stocks that comprise them make moves to the downside, that's almost always a bad sign. I can't think of any scenario in my past life where that turned out to be good, meaning like good for the bulls, taking the whole market to the upside. When the soldiers don't follow the generals, and the generals being the SPYs, the Indus, all these major indices, that typically does not bode well for the overall market. And the way that I kind of look at Bitcoin in comparison to all these fucking gutter coins, I look at that as kind of like the indice as well. Is this the right way to be looking at it or not? I'm not quite sure. They are interrelated, so I think that there's obviously that. At the same time, everything just kind of seems to run off of Bitcoin to begin with. So maybe I'm a little bit misguided in saying that, and I do want to talk about. I always want to be open and honest with the limitations of what I'm thinking here. But I would be leaning towards that is not a good thing for the overall crypto sphere. I really want to be seeing everything kind of move together, so to say. And right now, Bitcoin's stealing the show. Maybe like a couple alts are following. I saw a couple good charts, maybe in like Stellar, I think, but it looked like it was kind of losing its formation today. And just about everything else, just kind of either breaking down fully or trying to hold these more bearish patterns. So again, Ethereum and Litecoin are two of the big leaders in the market, in my opinion, and both are still stuck in these bearish formations. So again, just because you're in a bearish formation doesn't mean you're always going to break it out to the downside, but it's a lot more statistically likely, right? So again, if you do see Litecoin break above 93 and a half bucks, then that obviously be pretty damn good, and below 80 or 70 79 and a half bucks would be the opposite, right? Same thing for Ethereum. Ethereum above 540, it'd be interpreted as a bullish break of this bearish pattern, which would be incredibly bullish, and if you have a daily close below 450, 440, that would be the opposite, right? So again, we have seen it done before. Bitcoin has done it because Bitcoin's, a goddamn honey badger. But again, that to me that's what makes me want to not be crowned full on bulltard, right? So again, these are the kind of things that I'm seeing right now. Again, lower time frames, what I'm looking at right here, perhaps a neckline at 8,300. The second that we start closing, hourlies, 2 hours above there, I do think that we'll get that nice swift move to about 8,400. I just don't see much stopping us from there. And from that point on, you'd imagine that would lead to that snowball effect that we talked about, where, okay, now you got the inverse head completing, so we have an implied move taking us to about 8,600, which coincides with taking out that 200 simple moving average as well, which we haven't done in half a year. And then it would also, we also have the completion of that falling wedge, and we also on the 3-day daily chart, and then we also have and then we'd also just have a very nice consolidation above that, above this 8,000 level right here, and also the weekly. You have to be wondering about the weekly. We do get a new weekly tonight, and this weekly looks pretty damn good right here. And if I do put on my my titty sequential, then we can see very easily that this one, we're gonna perhaps have another chance to get a green 3 trading above a green 2. So again, that would be the signal for titty sequential traders to kind of enter in longs. Again, you did get a perfect 9 count to the bottom here and then up. So fair enough. All right, so that's it. That's it for the bulls, right? That's the more bullish, biased view on this, and of course, the more bearish, biased view on this is that if we really do start, trading back down and taking out 7,800, 7,700, and start, crawling our way back down here, it will start to look a lot like we just hit a corrective up move off of an overall downtrend, and we're probably headed much lower. So again, that's why I think it's probably worth it to be a little bit more prudent here, and that's why I want to be more neutral on the market in the current area that we're in. Of course, if we do take out 8,300, I will be entering in longs. And if we do start trading below 77 to 7,800-ish area, I'll start to be a little bit leaning towards the bear camp as well. So right here, right now, completely neutral, just buying support, selling resistance, and no more complicated than that. And I think that's going to do it for today. I hope everyone has the most beautiful Sunday mornings. I'm going to go have myself a bite to eat because I haven't eaten enough in the last week. But you know what? I'll be back on later for a little bit of live stream. I look forward to seeing you all, and take care.